Question everything, trust nothing. It's your boy CryptoKeeper, and it is TA Thursday. We've got two special guests. Someone in the chat was asking who's on today. Well, we have, as always, your boy Magic Internet Money. Magic, how you doing, brother?
I'm doing great. I'm still in awe of that new intro, man. I like.
You like that?
Yeah,
we need to put a so shout out again. I've been giving him a couple shout outs here and there because he did a great job with it. Big Rob from Sin City did that. He spent some time on that and he did a great job with it. We really liked his intro. When I was out in Vegas, I was like, bro, we need a new intro. And he's like, well, I love doing it. Like, let's do it. And awesome. He did a great job. If you've got epilepsy though, you got to let people know. We needed a little disclaimer. It's pretty intense. You know what I mean? And we've got, as was on a couple days ago, again, your boy Bill Noble. Bill, how you doing this afternoon?
I'm doing good, sir. Thanks for having me.
Glad that you are here. Crypto fam, if you are not already following Magic, if you're not already following Bill, their information is down below the stream. You should be. So fix that problem if you're not already. And if you're not involved with Danger Close Alpha, we've been talking about it a lot. There is a lot going on out in this crazy world right now. Yeah, figure it out. We got Arizona running out of water. Hold on. Did anybody hear that? Arizona running out of water. Okay. So Bill's got some solutions for that. We were talking about that the other day. Listen, prepping is going to be mainstream. I like Bill said that the other day, and that really stuck with me because we've been so fringe and kind of off the beaten path and, oh, who are these crazy guys? Well, guess what? The people that were in Bitcoin in 2011 were also the crazies. They are what we call wealthy now. So, hey, just throwing that out there. So get involved if you're not already, dangerclosealpha.com. Let's see here. Let's take a look at the charts, and then we will. You threw me with that, by the way, Magic. That's funny. Let me pull up the charts, and let's see what's going on. We've got the global crypto market cap at $980.26 billion with the B dollars. That's up 0.53%. Bitcoin and ETH have settled down. Bitcoin settled down right around that 21 number at 21,124, and Ethereum's at 1553. Both of those on the week. Bitcoin up almost 12%, ETH up almost 9%. We're going to hit on both of those. I actually don't want to ruin and spoil all the fun, but we're going to talk about XRP. So for all you XRP fam out there, put them up. Drop a 1 in the chat if you're part of the XRP fam. You're going to see some XRP TA today, so I know people are excited about that. And then we're going to toss in a couple others I will leave as a surprise. So the markets, they are looking, well, bullish, I think, but that's what you guys are here for. That is not what I am here for. So let's kick it off. Let's start macro level. Let's talk Bitcoin. Magic, talk to me about what you're seeing from Bitcoin, from the leader, as always. What's happening on the charts with BTC?
Right now, you've got consolidation below resistance. Let me go ahead and get a chart up. I'm going to switch which screen that I share for this, and I'm kind of curious what the audience thinks about it because I have been using the ultra wide, but I feel like that's going to damage like what you guys are actually able to see in terms of detail. So let me know if this is better for you. This is just like a curved Samsung. So
it's clear. It's crystal clear. I'll tell you that it's more clear, I think, than it has been. I don't know if that's your video.
Yeah, no, before I was worried it was just people couldn't really read the levels very well. And I'm like, they might be struggling. So I was watching some of these back on my phone. I think that's what a majority of people are watching on is their phone. So yeah, that's great. So in terms of what you're doing right now, I've had these levels on my chart since we started making the move up into this zone. So these are just pivots that I've left on there because they're high time frame averages of price. I've just been trading this as a range. Now, if you were to zoom out, you notice I have the October high and the November high mark. So you have one here and you have one here. So in terms of what's really important here, I'm going to get rid of this volume profile for just a second. You want to be noting these highs, right? This is what you want to be paying attention to. You want to see this monthly resistance start to get cracked, whether it's on like a weekly time frame. Obviously, it starts with like a daily time frame. But if you start cracking this, then I don't see any reason why we won't make the move up into this zone. And what I've been trying to drive home is that we're inside of a larger range. Now that we've consolidated ranges, so to speak, all the way from back over here. So you have this deviation down here below the December highs. You've come back into the range and you're sitting above all major points of control, meaning you're above the time point of control. You're above the volume point of control. And while this is resistance, it's not necessarily a death sentence. You want to see this consolidate, put something in constructive. Obviously, I have this zone marked out below us as kind of a must-hold support down about 19,632. If you lose that, I think you're probably making a trip back down, and what goes up fast comes down fast. But until that actually takes place, you have a nice range to trade here. This was a major take profit for me, though, on my longs from 16.6. I still have that long open, though, and I'm still targeting these highs over time. But when you're looking at this from a range perspective, as I was saying, about 22.8 to 23.3 is the next kind of pit stop on the road. And then, as we were talking about, you're just targeting these local highs. That's all you're doing. I mean, we can get as advanced or basic as we want. This is 22.8 right here. This is 25,000, obviously. And I think what you need to see out of Bitcoin is, even if it pulls back here, you want to see that higher low because you're going to get that eventually. But I think everyone's looking for that, and you may not get it. So for me, I think the safer play for me is still to continue to hold these longs. And until the market forces me out of them, I'm going to continue to do so. And this is the range right here as you start merging all the data. So you can see that you are at the last like high volume area on the chart. If you crack through this level, I wouldn't call this like super low volume, but you will get a quick move to the top of the range, in my opinion. And so that's what I'd be looking for.
We had a really, it was a pretty substantial move from going from, I guess it was maybe 17 up towards 21, 22. That was a big move, and it was getting kind of irrational. One of the things that I had talked about with people was that, hey, you know what? I think I'm going to jump in and into a short. And what I'm hearing you say is that you think that we've kind of settled down, but you still think that we're going to be creeping up towards the upside. Do you think that some of the correction that I was looking for has already happened? Is that kind of what you're assessing here?
Yeah, potentially. So when people are talking about like exhaustion on like traditional oscillators like the RSI, I think like something like this, you can see that on the medium timeframes, they've come down to major support levels. Like this is 46 right here. It's a very major level for most RSI. You're coming back up to the exponential. What I was planning for is more of a pennant shape. So what I'm looking for is you have a nice consolidation on the bottom here. I would like to see some resistance down sloping here, get that squeeze of price action, and then you're going to get the break, whether it's to the downside or the upside. And so it's one of those things where whichever direction it goes, honestly, my ideal scenario is I would love to fill this out, come down to this box, and then actually reclaim some levels. So everyone that's looking for 18 and 19K kind of gets left out, and then make the move up, short correction. That would be my ideal preferred scenario, but you don't get what you want all the time. So I'm trading this as a range. I've got my long-term positions in place. Like I've already made my hedge longs from down here. I've got my shorts running from up higher, which, I'm obviously monitoring price action to see if I need to maybe consider taking those off the market and having full exposure to the asset. So we're having that conversation now, but it's still too early for me to do that. So for me, these are all intraday trades. I'm not normally a breakout trader, so you won't catch me trying to trade the breakout of this. I'm going to be shorting resistance up here where those monthly wicks were at that I showed you on the November and October high. This is where you want to look for shorts, and you want to look for longs at support. And so far, the levels that have been outlined since back here are playing very, very well. And 20,400 is that kind of like bottom support. Yeah, if you lose that, I do think you see like 19.6. This is a biweekly pivot. It hits at 84% rate. So that doesn't mean every time, but it does get hit often. So if we start making that trek down, I know this is a likely landing zone. It closes the CME gap. You have a local gold pocket here. There's just a lot there. But if you lose this, again, this was a really quick move up. It can come down. And I would almost favor if you start losing this area, I think that you can make a trip all the way back down to the yearly open potentially. You don't want to jump to that conclusion right away. However, it can definitely happen when you get something like this.
Yeah, so, a lot of times in the past, at least, I've seen those moves down or moves up. When it goes the opposite direction, it literally moves very similar in that fashion. So you heard it here. Pay attention. Look at those ranges. Bill, one of the things that I like about having multiple people on the stream is that, for TA Thursday for Around the Charts, you guys a lot of times come to some similar conclusions, not always, but come to some similar conclusions, but you get there from a totally different perspective. Talk to me about the perspective of of some things that you're looking at as the markets progress, as you're looking at them right now as the charts.
All right. Well, that's a perfect segue. We didn't even talk about it in the beginning, but Magic is into, I believe it's called harmonics. Santa brought all 3 books for Christmas, so I'm going to be on top of that. But he had a date last time I was on the show, right around December, right at the end of the year. So I decided, let's see if I can corroborate his work with anything from, say, Gann or Fibonacci. And I have this nice preset on here. It's called Fib Time Zone. So this is a log chart of Ethereum, and I'm just going to go, you know what? There was a major low in 2016 in November, and there was a major low in December of 2018. And I remember this because I was working at a crypto research firm at the time, and I watched Bitcoin go to 3K, and I was horrified, and I thought it was going to go to 1,500, and then I realized that I was making the low by being bearish at the bottom. I quickly turned myself around as a joke. But if you look at the preset, this is just like straight up preset. This Fibonacci time tool basically says, you know, the next inflection point is, ta-da, at Magic's time frame, late December 2022. Then to get fancy, these rectangles here, starting with December of 2018 all the way out to the COVID bottom, 64 weeks. This is a weekly chart.
Okay.
Lo and behold, from the top in Ethereum, right, in November of 2021, all the way out to Magic's level at Christmas, ta-da, 63, 62
That's so
weeks.
wild.
Right? So winters are symmetrical. This means the following. Winter could be over. That doesn't mean it goes parabolic. It means the range gets reset higher. Now, if you want a Gann chart, I actually found one, okay, off my Twitter. So this is a hand-drawn Gann chart, essentially showing that there's an important 45-degree line. This is drawn by going 10 boxes over and 10 boxes up from the low at 1150 and just draw it all the way out. There really isn't any resistance. Like if this thing is above, say, 1550, the next level is 1850. So this chart is your tactical view, and this is the one that's basically hinting that winter is over. So if winter is over, how do you go from there? Well, you know, I'm sure Magic's got the tactical levels, but I'm changing my thinking, and I'm thinking that hedge funds don't own this market. In other words, there's huge people that need to buy, and everybody who has sold has already done so. So if there's a catalyst, who's the seller? Nobody, which means buyers have to bid up prices.
So hold on a second. So extrapolate on that a little bit more. Give me a little bit more information. Are you suggesting that retail is going to be what's driving the markets, or you're just suggesting that that overall the buyers as a whole are going to be driving the markets, driving that push up?
All right, good question. So I think retail is wounded, and I think retail is legitimately concerned about buying the market after an up move. Because every time you tried to do that last year, you got killed. Okay. Now, retail may not be focused on the fact that Bitcoin and Ethereum just got back above its prior 2017 highs. So retail is maybe gun shy, even though they shouldn't be. The people who are not gun shy are institutions. If this thing's going to go up again, it's going to be them. They're going to control it. And here's why. If you're a crypto hedge fund and you lost money last year, you have an excuse. Multiple black swans, you're in crypto, you lost money. Okay. This year, market starts going up and you're underperforming, or you don't own enough, or underinvested, or your returns are subpar. What exactly is your excuse? You don't have one. So if this thing starts to press higher, you're going to see institutions FOMO in the way retail might.
Yeah.
Just a theory.
This is part of the reason why for so long, and part of it is just the fact that I haven't had time with the other business ventures I have going on and other things going on. This is part of the reason that I just don't trade very often. I don't have the time to sit here and study the charts. But the other part of it is I feel like there's so many, and you guys have been successful with it. So bravo, like golf clap to you, because I look at this and I feel like every time I see what I think I see, I'm freaking wrong. So I just play it safe. I just continue to stack when I can. Long term, I believe in Bitcoin, and I'm just going to continue to hold until I die and pass it on to my daughter. Is kind of my game plan. But what I do like to see is that we get multiple people on here, you know, coming up with very similar ideas, and TA as a you know, a function of what it actually does. It's just showing like emotionally how a lot of these, you know, people and funds trade. They look at a chart and say, okay, this is what has happened before. It's just basically showing in the past. Boom, this is what I would do. And they're playing games with each other. So Magic, what I want to ask you is, you look a lot at volume profiles and ranges. Is part of that reason because that actual volume is coming in from these big institutions, these big hedge funds, the ones that are playing the games that I'm talking about? Is that part of the reason why that's so important for you?
Yeah. So in terms of like what you want to do as far as like trading volume, what the idea behind it is you're trying to find the footprint of the bigger trader through the footprint chart, ironically. So the word's kind of overused, but, and you ride that footprint until it disappears, meaning that if the market maker, or however you want to refer to them, steps into the market and decides to move the market up, you want to make sure that you're not fighting that, because you're not going to win that battle. You want to be following their footprint until it disappears. So yeah, you are kind of watching for lack of a better term, institutional players, things like that. This move up was really interesting. Bill touched on it, and you know, just kind of like for me to expand on it, he was talking about how there's a lack of sellers, and so seller exhaustion is a very interesting thing in terms of market, because this move did not start out as a short squeeze necessarily. It did start out as seller exhaustion when you were watching it. There was just no sign of weakness. People kept hearing me say there's no sign of weakness. And then it turned into a short squeeze later where people started entering shorts around 19K. So what that means is, let's say that, you know, I want to buy Bitcoin. There has to be someone there to sell it to me, right?
Correct.
But if there's no one there selling it, whether it's retail or institution, because there's seller exhaustion, price has to go seek out the next available seller, which means it has to go up to find that person. Once you find that person, the transaction happens. Then someone else sees it going up, they want to buy. Well, if there's nobody selling still, the price has to keep going up until you find people that are willing to sell, right? And then once you reached about 19K, that first hiccup, lots and lots of shorts started entering between $19,000 and $20,000. That was the thing we kept noticing, is that sellers were really stacking in. And a lot of times when you see that, you're like, it's such an obvious trade at that point where you just go, we're not quite at the resistance we want yet. Everyone's already shorting. If these guys get put underwater, which you can see that in the order flow, exactly where that line is going to be, we know that we've got a pretty good pop coming.
It's going to run.
Some liquidations are going to happen. And so that's essentially how this move is kind of transpired. So for me, it was kind of an obvious, like I wasn't looking necessarily for this move to take place. I talked about the idea behind it because the move down to 10K seemed so obvious. It reminded me of the summer of 2019, after you had that 14K top, you had this massive descending triangle. It dumps down to $7,200. Everybody wanted 6,000 back then. Nobody got it. It went straight back to 10,400, ripped everybody's face off, 40% in a day. And then it came all the way back down to the range. Now, am I saying that's going to happen again, come back down the range? Yet to be seen, you know, but to me, there's been no sign of weakness just yet. We don't have the trapped longs at the highs. We don't have things that normally you would need for fuel to send the price lower. So to me, until we see a sign of weakness, I think the trend is up. So I know John Connor's in here giving us some shit about being TA guys saying it could go up or down, but you know, there's a really clear underlying message here. You know, you just have to be able to make decisions if you're going to be trading that put you in the best possible position for risk. That's it. You know, that's all trading is. It's not as complicated as it seems. But to me, that's kind of how I'm looking at the market right now. Is I've got shorts from higher up still. So they are protecting me in case that I'm incorrect about this move coming up, you know, but I did hedge long because of a timing factor, like Bill said. You know, one of the big dates we also had was November 7th. We were looking for the 1-to-1, and November 8th was our big dump on FTX down to like, you know, 15 and some change. And I look at that and I remember thinking, I had the box for the top drawn out almost 2 years in advance to the day. And I didn't take the 69K short, even though I'd had it on my chart. It was in, I know, man. Like I
get it though. If anybody gets it, I get it.
What I told people was I'd wait for 62,000 to be lost. You get a swing failure pattern at the highs, and you got it. And then it didn't give you an appropriate short setup after that. You just had to YOLO a short in because it went straight down to 42 over the coming weeks. It never put in a big range or anything and gave us that opportunity, came back up, back tested key levels. It dropped down and then just kept dropping. And then your next really opportunity was like 52 and then 48 after, you know, it dropped out of that range.
Yeah.
So that's kind of what, you know, the issue was, is you can't hesitate. And so for me, I was like, it would be silly to not hedge long here, seeing that there's no more signs of weakness coming into the market. And in fact, you look like you have a failed auction to the downside, in the sense that sellers have the ball and they're failing to push lower. And now you're seeing a sign of strength. And you did have one on the weekly at 16,611. And that's where I started entering long, was because you had what was called, I call it a breaker pattern, where you haven't had a change of behavior on the weekly yet, where it closes below a certain level. And as soon as it did close below it. However, you want to see that next weekly candle open and close below that level as well. Well, you came down below the level, you respected it perfectly, you put in a reversal pattern, you reclaimed the level. And I'm like, that is, you know, in context, your risk is so low from that position because you're so close to your invalidation. It made no sense to not take the trade. And I told people, I think it was January 3rd or 4th, when I put on the position, that I would not close this position until I was forced to. And then I kind of made the tweet, am I going to close my 40K short, or am I going to close my 16.6 long first? Which one's it going to be? One of them's up 1,500%. One of them's only up like 100%. You guys tell me, you know? So I'm willing to ride it out and try to get the best,
right? The best outcome. I mean, that's what ultimately you're trying to do. You're trying to get the best outcome.
I'm not trying to predict too much, but to Bill's point, like sometimes you have to look at timing on things and you just go, I mean, it makes sense to get long here. It doesn't make sense to be selling at these regions of the chart. Does it have to be the bottom? No, but you know what? Calculated risk. You kind of have to, if scared money doesn't make money, let's put it that way. And in my opinion, the value is there. So
I like it. And you know, hedging is one of those things that's not just in trading. I have my portfolio hedged in like, just, I guess I would call it some creative ways. I have a few alts in my portfolio, for example, that I really believe in, that were like some super low, that basically like a flyer, right? It's an opportunity to take in a large influx of, you know, of whatever that asset is, should there be a big move. And I think for me, that's kind of a hedge against the greater market as well. I don't have enough money in there that it's going to hurt my portfolio, but I have enough money in there that it sure as heck going to help my portfolio if this starts to run. And I want to ask you something, Bill. So first of all, let's take a quick pause. If you are in the live chat on mobile, X out, smash the like. We've got about 50 people in here. Hopefully we've got 50 likes. So do that. And if you're not already in the Discord, jump in the Discord, Danger Close Alpha. Go to dangerclosealpha.com. You can find it there. So Bill, I watched a TikTok and it made me think of you. It was yesterday or the day before. I almost called you. And effectively what was suggested was that this last move, it was just a suggestion. It wasn't somebody saying, hey, this is what happened. But they suggested that with the debt ceiling that we've been talking about, Crusader and I had a great, if you want to see a great stream, watch yesterday's What If Wednesday about the debt ceiling. That was one of my favorite streams we had in a long time. Just an aside, check that out. But had suggested that because the debt ceiling was about to be reached and Republicans and Democrats were going to be at a standstill, they were suggesting that what if the government was in there buying up Bitcoin as a hedge against what's happening and the turmoil happening with the dollar right now? Talk to me about why that's either a crazy idea and it's just a TikTok that's trying to get views, or if you could see or make some sense of that.
Well, it makes perfect sense. First of all, on my stream, I like to spend time for a commercial interruption to make fun of everybody who last year was telling me the dollar was going up forever, because it's not. You can't have the dollar going up and deficits and debt ceilings, and they can't even balance the budget. It's dollar negative.
Fact.
Now, if you wanted to make money on the dollar going lower, you would buy crypto and gold. Now, are you going to see a day where a central bank puts Bitcoin on its balance sheet? Absolutely. The Swiss central bank is a hedge fund. They have massive positions in US stocks and bonds. Any government that's printed money to buy financial assets that doesn't have crypto on its balance sheet is crazy. It's crazy. I mean, you're not fully diversified.
Yeah.
So could you see a government or something as big as a government saying, you know what, we want to have 1% in Bitcoin, or we want to have a certain amount of Bitcoin in case we needed it to buy military hardware?
Yeah.
Right. So Bitcoins used to make big purchases, right? Cars, skyscrapers. I mean, you can buy coffee with it in El Salvador, but if you had to make a big purchase and there was something wrong with a payment system, Bitcoin would be the thing.
Yeah. Yeah, I thought it was a really interesting idea, and the only thing that didn't make sense to me was that I can't see a government actually like stepping onto an exchange. I feel like government starts stepping onto an exchange, and that's going to set off. I mean, you know, the amount, depending on how I guess they set up that the order flow effectively, like depending on how those buys came in, I can't see them like jumping onto an exchange. I could see that there being some large peer-to-peer transactions, but then again, do they have people to buy it from, which is kind of what we were talking about before. There was that seller exhaustion. So boom, I guess I could see it. It's a really interesting idea. At any event, again, smash the likes, guys, if you haven't already. Let's talk about some alts. So the whole market's been pumping. We have been told by you, Bill, which you were the first person to say it, that I've heard, hey, bottoms in, the run is happening. Not that we're going to all-time highs in the next couple months or anything like that, but that it has started, it has begun. We will have pullbacks, but it has begun. So alts, as a general rule, if you haven't been around crypto for a while, one of the things that you need to understand is that if Bitcoin runs 10% on a day, alts are running 20 or 30 or whatever. Like, it just depends on which one. But ultimately, there's your dad joke for the day. Ultimately, they are going to move exponentially versus Bitcoin, mainly because of the market cap. That's a big part of it. That being said, what are some alts that you guys are looking at? I know, Magic, you had something in particular that you have been actually, I think you had two things. I don't know if you want to touch on just one of them, and then I'll have Bill jump in and then touch on the other. I'll tell you what, hit me with Polkadot first if you can.
Yeah, let me get that chart up real quick, and we'll rock and roll.
XRP fam, stick around, smash the like if you haven't already. We're gonna get some TA on XRP as well.
DOT was, to me, it was a trade that we talked about on this channel. And so it was one of those things where we had talked about the idea that if it didn't hold like the $6 region, that we'd be looking for $4, right? Okay. And that area really just came through. So you had a big level of support here. Like if we scroll to the left, and you can see here that this has been support. So your demand zone is here. And then you just had a really nice technical backfill on like a monthly candle here. So you're essentially just marking off a zone. You don't have to be precise with this. But the thing was, you had a Q4 naked point of control that was left over, an inefficiency that rounds out the top of this box. So it's 438 down to 419 was the buy zone. And then you're just playing the mean reversion play. So if we know Bitcoin is going to be moving up, we don't know, but we start to suspect Bitcoin is going to be moving up and making a mean reversion play itself. Alts are going to follow, and alts actually end up being the better play a lot of times. In this case, it was 53.9% off the lows. And this little zone, if you'd bought here, you'd be very happy. First take profit was coming in here to Q1 and then into your local golden pocket, right? So you just have a local golden pocket right here from high to low. And you have the 2021 low. So on the yearly chart, that is actually your low from 2021. And it's just a really big area. So this was a great take profit for take profit one. Now you want to see this putting in something, constructive over the, coming like days and months here. So you can see that you've got your developing, we'll call it quarterly or monthly right now, because we're only a few days into the year, about 20. And if you were just to go high to low as well on this one, you'd say, okay, well, we have support here around the average. I've got a zone of support. Is there anything else here that would say I would like to be interested in price again down here? And you do. It is, again, another gold pocket, which you're going to find I really like these. I've been talking about them for years now, but coming back to this zone, your value area low, which is generally where you want to start looking at the potential for trying to auction a price back to the, the mean or where the most transactions took place here, is up here. This would be where I'd be interested in a pullback on Polkadot if we get one, right? And that's assuming Bitcoin pulls back as well. It's still pretty range bound. You're at the top of that range now, so we'll see what we get up there at the highs, right? So if you see that pullback to like 19.6, I would expect Polkadot to be pulling back into like this 510 to 531 area. And I'd be looking at that kind of opportunistically for now, as long as, Bitcoin's not completely rolling over and the DXY, as we were just talking about, isn't ripping. This is the play for me. And anything above 678, and then you really are just looking left and you're saying, okay, where do these highs start coming in at? Where do we start looking for this rally to end? And you're going to start picking out local highs essentially. And that can start to get up there, $8. That's 100% move off the low. Yeah, it's a huge movement, especially if this is only a bear market rally, as some people are alluding to, right? It's doesn't mean you can't long in a bear market. You just have to be a little bit selective. So for me, that's how I'm playing Polkadot. This was just a really obvious area of support. We were looking at it in terms of, I believe it was $6.78 was what we were talking about. And we were looking for a mean reversion back to the Q4 pivot. And that did come in over time. And then after that, it ended up dumping. Yeah, there it is. There's your Q4 pivot from the last time we talked about it. It deviated below the lows here up to the Q4 pivot, which is your mean reversion. And then we said, if you lose this level, I mean, $4.19 is the target. And we've come down, we've met the target. Again, this comes down to just because price is dumping, scared money doesn't make money. You set your alerts, you wait for a bullish reaction, and you know that you've got good demand from a prior historical range just beneath you at 376. So you pull the trigger, and it panned out. It's not always
pull the trigger and set. You pull the trigger and set a stop on that long, just what, 1% or so below. I mean, you're being pretty cautious with it, right?
Let's when you came down to the low here, this is your low, obviously. When you're coming down here, what you'll notice is that you started making lows, right? But right about here, this is swung fail. You've got a good reaction. You've come back. You've respected it as support. So what you've done is you've swung fail the lows, and this is where new demand is coming in. So in theory, as you're getting these swing fails, you can actually place your stop loss down below this low, or even below the 419 level if you wanted to. And as long as you're not getting closures below it and continuation, you're good to go. Or if you are very conservative, you could use Fibonacci retracements, and you could say something like, well, I'm just going to identify the next local high here on this, what looks like a double bottom. I'm going to look for my gold pocket. You've wicked right into it. You buy the higher low, right? There's two ways to get into that trade, and patience is going to be required on either one of them, which is a tough thing for most people. It's easy to get excited, but once you get that, you can find your entry, and off you go. And then it's a matter of, okay, I have targets. I've got a stop loss. I have all the criteria that I need for a trade. Again, got to pull the trigger, got to have the plan, and then you just execute. And look, the trade either goes your way or it doesn't. The only thing you can control is how much money you risk in the trade and how much money you can lose, right? That's it. That's all you can control in it. But if you play by those rules and you get a good system underneath you, you can start to extract money from the market. So I haven't closed all this position, but it has hit 2 take profits. So no matter what happens, this was a profitable endeavor for me. And I'm not a hodler like you guys. I don't hodl things. So if it comes back and takes me out, it takes me out. I don't even care. It is what it is. It's another opportunity.
Risk management is a common theme that you should be listening to if you are actively trading. It's one of the things that I've heard everybody from Zombie to Magic, excuse me, to Bill Noble. They've all learned some really hard lessons. Thankfully for me, I just have never traded on any large volume. But I've learned some lessons before, right? Getting greedy and not setting a stop, and not taking profits. All of these things are absolutely essential if you are going to trade. And so keep that in mind, ladies and gentlemen. That is financial advice. Freaking make sure you're paying attention. Make to your risk management. It's got to happen. It's got to happen. Okay, so Bill, have you been looking at any alts lately? If so, what kind of you have on the charts that you want to pull up?
Okay, well, I got a small cap idea if you're up for that.
Yeah, for sure. Why not? Let's do it.
I have something small and I have XRP. So let's do something small first.
Cool. Let's see it.
So I own this token. I work for the project. My YouTube channel's independent.
Yep.
Okay. So just to get that out of the way, but this is Blue Arctic. Okay. BARC. This is a project that is going to get water from Greenland to places that have no water.
Like Arizona.
Yeah. And there's more than one Arizona out there. So the way this is going to work is, just so you know, like you've got to go from ETH to our native token GLDN, and then from GLDN to the BARC water token. So in very simple terms, BARC is a water pricing mechanism. How do we get a price for water so we can move it from one place to the other? Just like the oil market helps get oil from Saudi Arabia to France. Well, that's the price of oil futures. BARC is trying to do that on the blockchain for water. All right. So, Arizona comes out, BARC goes all the way up, and then Bark retraces. I have it at the 62% retracement, around 11 cents. So ask yourself, does support hold, or are they going to do what I think Magic sees a lot is, are you going to see support? And then are you going to see a flush of stops below that? And then I think for risk management purposes, when it starts to come back and show strength, that's the point at where I'm interested. I'm interested in this from both a chart point of view, because again, you know, there's a lot of congestion here from where Bark based, right? It's basically, hopefully, simple. This was the base. This was the give up trade. Let me take the speed resistance line off of it. This is where everybody gave up on everything in here. This is a 4-hour chart. So Bark broke out and then it came back. And then based on both the fundamentals and the technicals, I think this is interesting. The next cycle, assuming I'm right that, you know, the lows are in and the next cycle could start with a range reset, not a parabolic, a range reset.
Mm-hmm.
You know, practicality and reality are going to drive blockchain and crypto versus liquidity and hype. So I'm looking at Bark. I've actually taken a look at Solana and Polkadot. And I know everybody on YouTube says this, but I think payment networks like QNT and XRP are out there. I've got my XRP chart. I'll let Magic do his.
Yeah, fantastic. Let's check it out. Let's move over to XRP. XRP fam, put them up. Smash the like if you haven't already, and drop a 1 in the chat if you are part of the XRP fam. I always love to, you know, just dig a little bit at Crusader. I don't know if he's still in the chat or not, but for those of you that have watched the show for any amount of time, you will all know that Crusader has lost his ever-loving mind a long time ago about XRP. Can't help but make fun of it as much as possible. And we've got 2 geniuses on the show that are actively trading it. Now, the real question is, though, are they shorting it or are they longing it? Let's take a look and see. What you got, Magic?
You know, I'm actually long XRP, and I told you guys I would do this at these levels. I don't care what XRP will or won't do in the future. I only care about the price. So you guys know me. I'm in this to make money. And to the guy who asked in the chat, because I don't know if my chat came through, he asked about the book on order flow. I plugged it before. So it is Volume Profile, Market Profile, Order Flow, Next Generation. That's the book you want. Okay. So that's the one that we kind of plug and say is probably the best one out there. And so, yeah, that said, let me get over to XRP. Very simple chart.
Check it out.
Something that
it's a very simple chart.
I say that as Bitcoin's getting rejected at the top of the range here. So let's find our high time frame XRP chart. I think it's right here. Yeah, Mr. Bitstamp. So I like to cover XRP on the weekly. I think that's the best one to do it. And I look at it in log because it has had such a massive move. And I'm going to make this just a little bit smaller so you guys can see better. So XRP, very, very simple chart. You can see I've already boxed off your Q1 low. That's all this is. So if you went to a quarterly chart, a 3-month chart, that's what this little yellow line right here is at 54.614 cents. It's been a very important low on many charts, both in traditional markets and in crypto in terms of just a resistance point. It's the major resistance for the SPX as well. So you've got a really nice range. Back to that quarterly chart one more time. You can see this is your quarterly backfill right here. This is where demand has been coming in. So this is going to be the new level of support you want to hold if you don't.
What is that, 30 cents or so?
33.24 cents on Bitstamp anyway.
Okay.
And that was the area that I was looking again to get long in because I've been looking at this as support from 29 cents to 36 cents since June of 2021. That was the zone I had for XRP. That's where I wanted to buy again. And it produced this nice move up. I did trade that. I posted that entry and exit on Twitter. And then I said when it came back down here, because I think it was when I had a show with you and Crypto Weatherman, or maybe it was Miguel that was the host. I can't remember who was hosting it, but
yeah, I think it was Crusader that day.
Yeah, but I was like, I'll buy XRP when it comes back to this zone of support, and it came back again, and so I bought it again. It was just one of those things where support is support until it's not. Stop loss below the low, and I'm looking to trade this as an overall range. Now there is a larger pattern at play. We'll talk about that, but you want to see this essentially get above 54.614 cents. That's also going to be the EQ right here of your overall, what I call global range. And you can see anytime that you get rejected here, where do you go? Bottom of the range. But what happens when you get above this area, right? You go to the top of the range, right? So support, support, now we're resistance. You get back above here. Where are you likely going? Well, the point of control from this consolidation is the 12-month open or your yearly open from, I believe it was last year, and that is 83 cents. So the 2022 open would be your target. And I don't necessarily think it stops there. I think once you deviate a range like that and you come back above, I would expect it to probably come up and try to challenge these highs and maybe even come to the top of the range. That is getting way ahead of ourselves because we still need to see this thing crack 54 cents. But that's how a move like that transpires. And people often ask me, they say, how do you know when to hold something, for a swing trade? Well, you have to start looking at a high time frame chart and you say, if this happens, I have no reason to close this trade. I bought here. I got a great entry. You can take some profits here and then let the rest ride and try to reap those rewards, right? That's all you're doing. Maybe even take a little more 5 or 10% of the position here just because it makes you feel better holding it. But for me, it's one of those where that's how I trade and I ladder out and I look for these higher valuations, but I make sure that I'm getting paid first so that the trade becomes risk-free. And then I rotate that capital back into other opportunities later. Now to the flip side, I'm favoring this move back into this range. I want to see this holding as a range. You have a macro reversal pattern on the weekly. We got a log for this. You can see it right here. This is a bat pattern. So I know that he said he got all 3 books. I actually DM'd you about that. I have all 3 books. I was going to send them to you digitally so you could have them.
I'll take them. I bought the hard copy because I'm old school, but go ahead.
Well, I've got digital copies of them. So I do that in the order flow book and stuff. So I have a library of like 1,000 books, dude. So if you ever want a book, I've probably got it. But yeah, so this is a bat. It's a reversal pattern. And the timing on this is just gorgeous. It's literally a 1-to-1. So if you were to go from X to basically your B leg here, right here in the center, which was a very fast B leg, you can see that this move is equivalent. So it's a 1-to-1 in time and price. We were just talking about those with Bill. So it's a really nice, clean bat. It was just a very quick ABC here at the high. Then you got the rate of expansion that took off for the rate of expansion to the high. So really nice symmetrical correction. Now we've got clear invalidations. Like we have a clear setup in play, and the risk to reward for going short in this region is just not good. So when you're asking long or short, you're not shorting here, at least not if you're any kind of a, any kind of a support and resistance trader. You're going to be looking at this to take a long. So for me, it was just a matter of, risk management. I'm just going to buy some. I only trade spot with XRP. Sometimes I'll put like 1.22x leverage on so that I can show the little screenshot from Bybit. But regardless, dude, I know it's really petty at that point. But it's like at that point, it's you're a clout goblin and you're just looking for clout. But it is one of those things where, I'm guilty of it like any other trader. We like to do that. We all have.
We like to win and show people that we win, right?
Yeah, I win too, right? But so XRP's got potential upside. If you look at this from a structural standpoint, and so this is something you won't find in the books, is you'll want to target this B leg. And the reason that you do on a harmonic is because think about the range that's up here. Normally, when you get a pattern like this, you have more consolidation above this level. Like on a weekly chart, it's hard to see. But if you start getting down to the daily, you can see you've got a little range here that formed. And then it starts expanding to the downside. So this becomes resistance. And once that becomes resistance, you start targeting your expansion rates. And that's how you get these, common retracements like an 886 and a 1618 type thing, which is a very common one in harmonics. So that's where your next target's going to be, which is right in line with kind of the point of control and the EQ type thing. Like you're looking in between like 80 cents and $1 at that point.
Which is over 100% move at this point. I mean, that's
well over. That's a 300% move. That's going to have to, the rest of the market's going to have to correlate with that. Like, Bitcoin's going to have to not make new lows, obviously. SPX is going to have to continue to do what it's doing and like holding, I wouldn't say holding strong, but trying to hold up against a potential downturn here at resistance. And if that happens, I see no reason why alts won't follow suit. And this one offered up really nice potential. So,
and then obviously as well, we always have to keep in there the idea that if this case is over at any point, anytime soon, and it's good news for XRP, it's going to rip, I believe. When I say rip, I'm not talking $589 for those of you XRP fanatics out there, or $50,000 buyback program. Zach Rector, we love you, bro. Don't worry. I still love you. But 50K XRP, I don't see ever on the face of planet Earth that happening. If so, again, I'm buying a private island. You guys will all be invited. I'll pay for all of your tickets. We can do whatever for the rest of the world forever. So
I did put what exchange that you can. Somebody asked what exchange I'm using. I said Bybit.
Oh yeah.
Just so you guys know, I trade on Bybit, so I've never had any issue with XRP trading on there. They're not.
You need to know which exchanges that you guys are getting involved with, though. Just pay attention. Leverage trading is one of those things that the United States is weird about. That's all I'll say. There are things such as a VPN that you can use at your own risk. Not financial advice, as always. So, Bill,
I couldn't see it. Go ahead.
Question for you. You said you have XRP as well. Let's finish the show with XRP. Tell me, do you agree with Magic, first of all? Second of all, why or why not?
Well, I definitely agree with Magic that there are structures here that show that if XRP does get loose, it could go. Here's the common sense argument for XRP that no one is making.
Okay.
The US dollar payment system is being challenged. The US dollar is being challenged.
By the BRICS.
Now, when the US right. The Russians, the Chinese, you name it. There's a line.
Yeah.
Now, if you had an alternative payment system, would you want one created by the enemies of the West, or would you want something from the private sector that's politically at least neutral, or hopefully neutral if we could stop picking on Ripple Inc. and XRP? But XRP and QNT as payment systems in crypto could be a theme for the next cycle. Now, when on my XRP chart, I've got something called the Williams oscillator. He calls it the Williams awesome oscillator. Williams was like a momentum trader, like a quant.
Okay.
And this oscillator, which, I don't know, it just puts all these oscillators together so you get one signal. And one of the interesting signals that you get is when the oscillator gets near zero. So currently it's very close to zero. I marked different points with arrows at other points where it was close to zero. And that simply means that you could get a big move. It doesn't necessarily tell you the direction. It can, but every time you look at the blue arrows at XRP, that oscillator has been near zero. You got the big up move in 2020, and you got the big down move in September of last year. Now, I have an outside the box fib time structure that, it gave me a nice low and it gave me a nice high. And I'm just wondering if what's going on here is the inverse of what went on at the top, right? It hit the time marker, and then, I don't know, it kind of went sideways and then started to go lower. And I'm wondering here, if XRP hits the time marker, you get a signal that a big move is coming. I don't know. If a big move is coming in XRP, where's it going? Does the government, remember when XRP was like the villain in the mind of the government? Well, I think we can agree that the government's got much bigger villains to deal with than poor XRP. Payment systems could emerge. The chart is set up both on this is a higher time frame. Magic has, basically all of the price action dissected into I don't know, to me, it almost looks like grids where he's expecting certain behavior in certain areas.
Yeah.
And the probability from what I heard is that this thing could jump. And it's really kind of funny. I did a tweet about XRP and lost 10 Twitter followers.
Hold on a second. You lost Twitter. Usually the XRP fam is XRP and Cardano are the two that they just absolutely, just go nuts usually if you talk about what they got going on.
Well, maybe they're a little angry. Maybe they're tired of being, you want to say, you want to give honest analysis.
Yeah.
But maybe that community is a little frustrated. And I was like, you always got to be careful when people get frustrated about the thing that they believe in. Magic was talking about Bitcoin at the highs. It's all easier said than done, right? It never trades bad at a high, and it never trades good at a low. And if people are in a bad mood about XRP, I'm willing to talk about XRP, and this chart is decent.
Yeah.
It's decent.
One thing I'm going to throw in there is you've got the chart up, so leave it up, but you're on the weekly, which is perfect. Compare that to Bitcoin from 20K to 3K in 2018 when it dropped. You remember how it went from 20K to 3K, then all the way back up to 14K, which was its gold pocket, and then back down to 3K. When you look at the XRP chart from its all-time high, it's come down, it's made a new low. It's come back all the way to the top of its range, which was a really nice retracement. And now it's doing what Bitcoin did. It put in this really big macro range sideways. And so you have a range there, and that once it expands to the upside or downside, you've got a really big move coming. So when people say XRP is going to zero, I kind of laugh. So I'm like, when this range breaks, if it breaks to the upside and you're still saying that, this is a 4-year range. And we saw what happened last time Bitcoin did that. It went from 3K to 69K. I'm not saying XRP is going to go to $100 or anything like that. But if you were to measure out the move in linear and logarithmic scale, linear is like $4 or $5, and then log is 20. Depending on which scale you believe is going to be more accurate, it's going to be a tough trade either way. I probably wouldn't be holding it to 20 because me, I'm going to take profits and do my thing. But to the people that are holding it, that range breaks the upside. It cracks over $1, probably 57 cents, and starts expanding. It's going to be a very quick move. I'm not saying it's going to these crazy valuations, but it will definitely rip. That's for sure. It will.
Crypto fam, what are you doing to put yourself in a position to win? Are you trading? Are you long-term hodling? Are you stacking when you have the opportunity? Are you dollar cost averaging? What is it that you're doing right now to get yourself prepared? And then my question would be on top of that, not only what are you doing to prepare yourself and your family financially via using cryptocurrency and paying attention to the US dollar and paying attention to global markets and what are the BRICS nations doing? I know this all sounds like a lot, but to be truly insightful, I believe, in these markets, you have to pay attention to things that are going on all around you because it gives you the full-on big picture of where we very likely are headed, whether it's TA or whether it's just flat out, hey, this is what's happening in the world today, and this is why I have that game plan. It's happening. So get involved with Danger Close Alpha. That's part of what we're doing. Preparing. We're preparing for everything, including your financial well-being and ours as well. We believe you have a responsibility to your family to do that. So go to Danger Close Alpha, check that out. Bill, Magic, as always, it has been a 100% pleasure. Again, crypto fam, if you are not following the famous Crypto Bill Noble or Magic Internet Money, make sure that you guys give them a follow. The links are down below the stream. You will not be disappointed. We love you, crypto fam. You could be anywhere on a Thursday afternoon, but you're sitting here with DCA fam, with Debate Crypto. We love you. Just remember to question everything, trust nothing. And until next time, hodl like it's hot. We will see you soon.